Hi, I'm James Smith, Chief Executive Officer at DRA Global. Today we released our full year results for the period ending 31 December 2022 and updated the investor community on our strategy and outlook for the business. DRA is a global multidisciplinary engineering, project delivery and operations management group focused on the mining, minerals and metals industry. Our team provides world-class capabilities across engineering, project management and operations. We bring deep expertise across a range of commodities, including the platinum group metals, base metals, battery minerals, rare earths and bulk commodities. We foster a culture of excellence in delivery, having completed more than 8,000 projects, studies and managed service solutions. We exist to deliver for our clients, enabled by a business model that supports the full project lifecycle, spanning project development, project delivery and execution, and operations and maintenance, with our values underpinning everything that we do. We are differentiated by our broad commodity capabilities and bolstered by specialist skills in mining, processing, energy, water, and non-process infrastructure. Our talented teams service our clients around the globe with more than 4,000 people engaged across 5 continents and 14 offices that are located in or around major mining jurisdictions. The first half of FY22 was a challenging period for the group, with profitability negatively affected by fixed price construction contracts in our APAC business. In direct response, our newly formed and aligned global leadership team have taken significant action. We have refocused on our core competencies, exited loss-making businesses, and resolved certain legacy disputes and contractual matters. We now have a stable leadership team and a clear business focus, which delivered positive second half results. Notwithstanding the first half impacts, I'm pleased to report the group recorded a strong second half in FY22. By year end, we had generated $895 million in revenue, allowing us to deliver a positive statutory and underlying EBIT outcome. As such, our FY22 results represent a rebasing of the business, with the improved performance through the second half of the year demonstrating the positive trajectory we expect moving forward. I'll now hand over to our Chief Financial Officer, Michael Sucher, who will provide a detailed review of the year's financial outcomes.
Thanks, James. Let me start by saying that I'm very proud of the extremely hard work put in by all of our people to really turn DRA around through the course of the year. In particular, I'd like to highlight those in our APAC business, which had to pull through a difficult period and supported the turnaround of DRA in the second half. From a challenging first half, DRA performed solidly in the second half of the financial year to deliver a modest underlying profit in line with our revised guidance. This was on the back of continued strong operational performance from core EPCM and operations and maintenance businesses in each region. This improvement in financial performance in the second half is an endorsement of the decisions we made to reset and strengthen the business to focus on quality of earnings in our well-diversified businesses and ensure sustainable future profitability and growth. Looking at our FY22 earnings in detail, we see that EMEA delivered a strong set of outcomes for the group, with our projects, Minipex and Senate businesses combining to contribute almost $64 million in EBIT for the year. Setting aside the recently divested GNS business, our Americas and recently restructured APAC regions combined to contribute $12 million in earnings. The group's total FY22 EBIT, excluding GNS, was $51.3 million and a statutory EBIT outcome of $1.5 million. There are some items that are adjusted for on a consistent basis year on year to better reflect the underlying profitability of the group. Adjusting for items such as non-cash impairments, the group delivered an underlying EBIT for the year of $7 million. Through the period, our cash position decreased to $142.2 million, representing a $27.8 million drop from the end of last financial year. This was largely due to the operating cash outflow of $14.1 million. Early in the financial year, we completed the Stockdale investor share buyback to unwind a pre-IPO funding structure for a $16.3 million outflow. And at the end of the year, we sold the previously issued settlement shares to strategic investment partner Apex for $7.9 million in net proceeds. We ended the year with $142 million in cash and $83 million of debt for a net cash position of $59 million. Our cash balance comprised of the base level working capital required to sustain our businesses, cash required for bonding and statutory or exchange controls, cash held in non-wholly owned subsidiaries and customer advances, and finally cash that we have committed for various tax, debt and capital obligations. This then left us with a small cash surplus at the end of the financial year. The group's level of gearing was temporarily elevated through FY22 due to the payment for completion of the Stockdale share buyback, funding of the GNS losses during the year, and as well as settling 2 pre-IPO litigation matters. This is expected to unwind through FY23 as our short-term debt facilities are repaid. We are prioritising financial and operational discipline going forward to ensure re-strengthening of our balance sheet. We are committed to sustainably growing our people and our business while targeting attractive capital returns for our shareholders. Our priorities for FY23 include retention of and investment in our people, reduction of our financial gearing to below the 20% target level, maintaining base working capital, as well as capital expenditure to support current operations and near-term growth opportunities. Thanks, James.
Thanks, Michael. Operationally, the group performed well through the financial year, delivering 473 projects, studies and consulting assignments, and operating 14 processing facilities and 2 underground mining sites, a great achievement for DRA and our clients. During FY22, we secured $638 million in new contract awards and extensions across multiple commodities and regions to support an improved backlog of $858 million at the beginning of FY23. We strengthened our geographic footprint in North and South America, setting us up for continued growth in the region, and have a business that is now focused on core EPCM and O&M activity. We are committed to ensuring that everyone goes home safe at the end of each workday. In 2022, we continually looked for ways to improve the way we operate, reduce risk to frontline employees, and increase visible leadership. As a result, we improved our safety performance and recorded a better lost time injury frequency rate and total recordable injury frequency rate result than the prior year. We recorded a 23% improvement in LTIFR and a 33% improvement in TRIFR. A contributing factor of our success is working closely with contractors and business partners to ensure alignment of our safety culture and expectations. Our people are the cornerstone of our business, and we continue to focus on attracting, growing and retaining the best individuals to complement our high-performing teams. Through FY22, we reshaped our corporate structure and introduced a smaller global executive leadership team to streamline decision-making and improve outcomes across our businesses. We enhance our approach to supporting our people to fulfill their career aspirations by providing additional insight into career opportunities and role progression at DRA. In South Africa, we confirmed our continued commitment to inclusivity and empowerment of designated groups by proudly maintaining our Level 4 BBBEE scorecard rating for DRA and our Level 2 BBBEE scorecard rating for Minipex. We are deeply aware of the social, environmental and economic disparities in the places where we operate. We strive to leave a positive legacy by supporting local employment, enhancing livelihoods and contributing to the improvement of local communities. These were just a few of the community initiatives we supported throughout the year. DRA is set up for a positive year ahead. Our people are focused on continuing to improve the quality of our earnings across the group, which will allow us to re-establish our balance sheet strength and enhance our cash flow generation. Importantly, our pipeline is well diversified across regions and a range of commodities, including precious metals, base metals, battery minerals, rare earths and bulk commodities. Going forward, we are focused on our core EPCM and O&M capabilities, where we are confident we can add significant value to our clients while continuing to improve the quality of our earnings. In closing, and on behalf of the senior executive team, I would like to thank our dedicated people around the globe for their hard work and commitment to our clients and our business. We look forward to a safe and productive 2023, working together to turn the future of mining into reality. Thank you.